Hello and welcome to my take on the current drivers behind cereal and oilseed markets. With 1819 drawing to a close and domestic old crop wheat and barley prices converging with the new crop, markets are now fully focused on next season. Grain market sentiment has recently flipped from one of bearish drift and mounting global stocks to a bullish bounce. Although the UK and much of Europe has felt a bit dry with below average rainfall, the US has been waterlogged with repeated thunderstorms. The continued rains in the US have gone from being of market interest and sentiment to actually being a cause for concern. As time is now running out for US farmers to plant maize, prices have been sharply reversed. Although there are large stocks of maize in the US and record harvests in South America, production in the US Corn Belt remains essential for the global supply. Should US farmers be unable to plant the intended area, then maize prices will likely continue to climb, offering support to all other grain markets. So although global markets are still receiving support from a rebounding maize market, unless there's now a substantial change in demand for wheat, the fundamentals remain for a well-supplied European export-competitive wheat market in 1920. Across Europe, conditions remain favourable, with expectations for a larger wheat crop and greater exportable surplus. Likewise, Ukraine is forecast a 30-year record wheat crop, and Russia the second largest on record. Couple these European forecasts with the excellent condition of US wheat, and a forecast increase in Canadian wheat production, and the Northern Hemisphere wheat looks to be plentiful. And in fact, global production in 1920 is projected to set a new record. Additionally, from our domestic perspective, the UK will potentially need to price at a more export competitive level, and with the continued Brexit uncertainty and trading relationship questions, may have to price relatively lower than has previously been necessary in order to find these export markets. So while wheat is looking good across much of Northern Europe, the conditions for oilseed rape haven't been so great. Starting with less than ideal planting conditions, cabbage stem flea beetle damage and sporadic spring development, yield potentials are now limited. Yet Ukraine is forecast a much larger crop, and massive stocks in Canada are limiting some of the potential upsides for oilseed rape. However, like with maize in grain markets, soybeans somewhat set the global oilseed market direction. And although the ongoing dispute between the US and China has led to huge stocks of soybeans, the continued rainfall in the US is also delaying soybean planting, which has recently led to a rally in the oilseed complex, providing support to Paris rapeseed futures. So to round up, there's currently a bullish sentiment in US grain markets, but now also oilseed markets too, which is offering support to UK markets, although potential gains in oilseed rape are being capped due to large oilseed stocks and favourable conditions in the Ukraine. The UK will likely need to price at a more export competitive level in wheat for 1920 for wheat. In order to keep up with the market drivers and cut through the noise and find what global events might actually mean for the UK, make sure to subscribe to our daily market updates.